What's going on, guys? Welcome back to the channel. A couple quick things I want to go over with you guys, including a short video, I believe it's about 3.5 minutes long, from CNBC, where they were talking about hedge funds on a mass scale are getting blown up and going out of business, and that is why you are seeing commodity prices going up as much as they are. And these are experts that have been in the fields for over 30 years. So I think you guys will find a lot of value out of that. We have a short oil update to talk about as well. There was a bit of a negative catalyst for oil. If you are in a lot of oil trades, that is definitely going to be a positive thing. Nonetheless, I know a lot of people are involved with oil right now, so I want to keep you guys up to date on anything that develops in that aspect. As well as that, I do want to talk about the trading that Senate and Congress people, you know, guys, girls, all of them, have been doing around some information that they were probably privy to before the general public was. So with the intro out of the way, let's get into this video. As always, hit that like button and subscribe to the channel. Let me know your thoughts on these various topics down below in the comment section. And if you guys want to come trade with us, get access to all of my trades in real time, as well as source news and information and trading ideas, stocks, tickers, all of that, even crypto, come check that out. Link down below in the pinned comment. We would love to have you guys. As well as that, get yourself some free stock as well, because free money is free money, and Webull right now is giving out 10 free shares if you sign up and deposit $100. Webull gives out 5 free stocks for signing up and depositing $100, and public, you don't have to deposit a single thing to get your free stock, so check that out. But nevertheless, let's get into this video, and I want to go over this first. This is an oil update, because like I said, I know a lot of you guys are in oil trades as well as I am, so I want to keep you guys somewhat up to date with that, not go over oil throughout whole videos, but if there is updates, I will bring them to you guys. And we are getting this update. It says Saudi and Emirate leaders decline calls with Biden on Ukraine. These were calls and were going to be conversations around producing more oil, or even saying that can bring down the price of oil. If Saudi Arabia, if a lot of other, you know, places came out and said, hey, we're going to start pumping more oil, the future price of oil, or what the price you see, that $130 a barrel, that number would come down quite dramatically, because it's all about future expectations. And right now, not a lot of good news as far as the price of oil going down, and they won't even talk to Biden about pumping more oil, or even talk about oil in general. So it looks like for now your guys' oil calls are probably going to be okay. And then it says right here that this is the guy, Sheffield, Biden needs to reestablish relationship with Saudi, and that's obviously not really happening right now. And then Suncor says Canada can replace 1/3 of Russian oil imports to the US, and this is not really anything new. It's not pumping any more oil out. It's not changing anything. So the oil markets, as far as right now, they don't really care about that. You can see oil's up almost 2% pretty much across the board. Natural gas even up 1.68% as of right now. And I think a lot of people are waiting to see what happens with Russia here in the next couple of hours. If they do retaliate and they do start to essentially limit the amount of oil they will send to Europe, or completely cut them off. That's very well possible, and same goes for natural gas. So we're in a bit of a weird state of limbo right now, and we're just waiting for the next catalyst or the next update. So that's the brief oil update. As far as this, I think this is far more interesting. From Unusual Whales, this has been on their Twitter for a while. It's actually the pinned comment, and I wanted to show you guys this, and then let's get into the new development, because oh man, talk about corrupt. You can see this is the SPY, this gray bar right here. All of these Congress members beat the S&P 500 in 2021. Keep in mind, the S&P 500 was up, what it closed, 26% for the year. So all of these people beat it by a lot in most cases. Some notable names: Mitch McConnell, Peter Welch, Nancy Pelosi, right here. So she beat the S&P by over double. Yeah, and then you can see the top guy, Austin Scott, he beat the S&P by almost 4x. He doubled up his portfolio pretty much in 1 year. Wild, just wild gains some of these Congress members get. And it says right here on the side, I have just released a full trading report on politicians in 2021. In short, many beat the market. They traded more than ever before, and they made numerous unusually timed trades, resulting in huge gains. And go ahead and read that if you guys have not already. But here's the new update, again from Unusual Whales. So shout out to Unusual Whales. Thank you for what you do. It says numerous politicians bought energy plays before their run-ups and general discussions on banning Russian oil. Many are on committees privy to private information, including defense and energy. Many had not purchased energy plays before. It says, Marjorie, Taylor Greene bought American oil stocks CVX, war stocks LMT, and renewable energy stocks NEE 1 day before the invasion, and also tweeting, quote, war and rumors of war is incredibly profitable and convenient. Robert Whitman bought XLE Energy ETF on January 28th, 2022. Mark Green, who frequently invests in energy stocks, recently bought up to 1 million in ET, that is Energy Transfer, February 9th, 2022, and over 1 million in ENLC between February 9th to the 18th, 2022. Virginia Fox bought PAA, PPL, and PSX on February 15, 2022, energy stocks, which was reported today. These trades are unusual as many had not purchased energy before. So definitely go ahead and take a look at this. I wanted to bring this to your guys' attention because I think these kind of things should be shared, because honestly, I think even the SEC or other regulatory bodies don't really pay attention to the individual moves that a lot of these people are making. And I'm not even, and I know I might get hate for this, I don't care what anybody invests in. I have a problem with them investing in this a month ago and it's coming out today. If their trades were published the day they make their trades, all is fine, all is dandy. We would have a heads up like, hey, this invasion probably going to happen. We should get ourselves some oil as well. That's not how the system works. That's the real problem here, and I hope you guys see that the same way. It's not they shouldn't be able to trade stocks. It's that the reporting should be done every single day as soon as they do it. There's no reason why reporting can't be done 5, 10, 15, 25, 30 minutes at maximum after they make a trade. I don't think that's too crazy in this day and age we live in, but nevertheless, let me know what you guys think about that down below in the comment section. Would love to hear your opinions on that. Now, you know, I like to watch a lot of videos, so I like to keep up to date with what people are saying, especially on CNBC. They have a lot of seasoned investors on there, which granted, I do look up their performance from time to time, and they usually underperform the S&P 500. Very rarely do they outperform the S&P. So I don't like to listen to these people, but I do like to listen to some things they have to say. Most of the time they are wrong and they make bad calls. Like this guy you're going to see in this video. He said to basically short oil pretty much right before it started to rally. But what they start to talk about is the commodity moves that we are seeing now are essentially blowing up hedge funds. That hedge funds across the board are feeling massive pain. And that really goes back to what I said earlier today and what I've been saying about the liquidity crisis is worsening. I believe, what did I title the video that I made earlier? Let me just check real quick. 1 second. This is getting very bad and the liquidity crisis is worsening. I think this is further evidence of what I was saying in these videos, and I think you guys will find a ton of value out of it. So let's get into this video. That's going to wrap up this video. Thank you guys for watching. Join the trading community as well as get yourself some free stocks, and I will see you guys later on tonight on the live stream.
Paul, before we let you go, you've been at this in terms of covering the oil industry for decades. I think that's right. 30 years. Okay, so it is decades plural.
Gulf War, actually Gulf War 1 is when I started.
times of this extreme volatility, I mean, oil is up, what, 7% this week, 26% last week. What happened to funds out there? I mean, we've been talking sort of here, and I'm wondering if you're hearing anything about commodity funds broadly, whether it be oil or funds that also trade things like wheat, et cetera, being on the wrong side. I mean, who would have predicted this sort of volatility?
Yeah, no, it's a disaster. And, you know, one of the things people have been saying, for example, about Chevron is this thing moving because it's a pretty obvious major short that, you know, potentially getting blown up. Because if you look at the Chevron chart, especially with Chevron's exposure to Kazakhstan, it kind of doesn't make any sense. You know, I can understand things like Halliburton and service companies ripping off a low base, but Chevron's already at a record high and then it went parabolic. So yeah, and as you know, the nickel story, you know, has actually had the whole London Metal Exchange suspended. I mean, they stopped trading, which is how crazy it is. So yeah, it is a time when we're expecting to see blowups, you know, pretty much in everything in commodities, and someone somewhere is hurting. There's a huge amount of pain out there. There's no question.
Paul, thank you. Good to see you. Paul Sankey, Sankey Research.
It's always a pleasure.
Paul mentioned some of the other commodities on the move. Gold prices, they settled their third highest close ever. As Paul had mentioned, LME suspended nickel futures trading for the first time ever today. Wheat rising again after 6 straight days of limit up. It was actually limit down in today's session. Guy, you know, at one time you traded gold. This is extreme in terms of commodities.
Well, for gold, it's not, but for commodities, absolutely. Right. And if for somebody to say they've seen this before, nobody's seen it, especially in nickel. You know, Tim talks about standard deviation moves in the market from time to time, 2-3 standard deviation moves. In our world, you know, that's big news. I mean, nickel had a 30 standard deviation move, things that, again, nobody's ever seen before, to the extent that they had to shut it down. Now, we started, you know, you asked Karen what's wrong with the banks, and she gave a great answer. I think some of the things that might be going on, don't underestimate their exposure to potentially sovereigns that could potentially be blowing up in the commodity world, hedge funds, all kinds of different things. I mean, that's out there. That's the next headline to come, that such and such blew up in the base metals world, because it's happening before our eyes, but it speaks to everything that Paul talks about. By the way, he's probably spot on in terms of crude here. I mean, it's not a bad level, especially in the OIH, which has been ripping, to take some money off the table.